Yo, what's going on, guys? Welcome back to the channel, man. It's been a minute. I haven't made a video in like a week. The market has just been really slow the last like week or two, and there really wasn't much to recap, and I've been busy. So pretty much the last like week, the market was just chopping left and right. I barely traded. I probably took only a few trades within the last 2 weeks, and nothing, like no crazy winners or losers. Came out with some green, but once the market got really choppy, I really stayed off the charts for most of the time until, the market I saw like started picking back up. So like on Friday, it was a good day. Like Thursday and Friday were really nice days. So I'll go over that really quick here. If we go here, 30-minute time frame told us exactly when pretty much the focus was on long. So if you look here, 6:15s on Friday, what happened? So the 30-minute cross, the 10s above the 50. 50's curling up. At this point, market's bullish. Why? The 10's above the 50 and this 50 SMA here got the curl over in this area, and that's when we flip bullish. Just because the SMA is crossed doesn't mean we're bullish. The 50 has to be flat or curling up. If it's sloped down like this over here and we were crossed, the market's not trending. You have to wait for that 50 to flatten or curl up. That's like the deciding factor in whether the market's bullish or not, or you take it cross or not. So you gotta, a lot of people don't understand that, and they get burnt because they don't know that. So with the 30-minute crossing, focus is on the long side. So on Friday, this is what the 0-day chart looked like. I didn't call this out in Discord because it was like pretty much right off of open, but I ended up just longing this dip down here. So we actually got two dips you could have bought right here off of open. This got eaten up really quickly. If you played the reclaim, obviously it didn't really do much. We got back up with the 10 here, and then it pretty much held this whole way. Then it closed below here. But I mean, I really wouldn't even play the reclaim with a 10 just because. You just buy the 50 dip. Like why wait for the reclaim? Buy the 50 dip since we are trading bullish. So I mean, if you scoop these dips down here, you got paid. I mean, NQ probably ripped like, I don't know, depending on where you entered, anywhere from like 50 to probably like 70 points depending on the entry. If you waited for this dip down here, you probably got paid more than you did back here, because you probably just would have had a better entry. NQ was lagging a little bit. This isn't like a great representation of like how NQ moved, but if you bought this initial dip right here, this move up didn't give that many points, but this one gave a lot more points than NQ, even though SPY moved the same. So this is how you would have played it. You just buy these 50 dips until it doesn't work. I got paid on this like 50 some points probably, and then we ended up breaking below the 50 right here, and that would be your ultimate stop on this thing. So yeah, and then the 10 went below 50 here on the calls. But see, this is the thing. The market's bullish. You do not take the negative cross on calls when the market is trending bullish. There is no reason to do that in this scenario because the 30 minutes cross. So there's no trade here from this chart for the rest of the day. So the call side right here is not telling you really anything, except maybe in this area if you were back in longs, and there was a reason why you would have been back in longs if you go to the put chart. So if you go down here on the puts, what happens? So we ended up pushing up in this 50 SMA here on the put side in a bullish market. So either you could play this reject right here at the 50, stop loss right above, or you could wait for the closure back below the 10 after we reject the 50. So it's obviously higher risk if you just buy, or not buy, go long here at the 50 rather than waiting for like the confirmation of the rejection. I usually just try and take a stab right at this 50 SMA and have a tight stop, just because a lot of times when we're bullish and the puts coming to that 50, we reject, and that's pretty much the bottom for the day, and that's exactly what happened. So either or, you would have shorted, or not shorted, I don't know why I keep saying shorted, but you would have longed right here or right here. So your stop would be a closure above the 50, never close above, and you could have just held this thing if you want. You could have just trailed this 10 SMA and hold it until we got near that 50 on the call side. So once we came up in this area, you should be all out of your position, just because the market is bullish, but we are coming into a key resistance spot, and this 50 is trending down super hard. So at this point, just hold it until we start rejecting near this 50 and just wait for the cross at that point. I mean, this gave probably a really nice move. So I mean, once we get near this area, just sell and then wait for the cross. There's really no reason to hold that. Sometimes, yeah, you'll get paid big time, but I don't know. I prefer just to sell it near the 50 and then wait for the cross, because sometimes we do reject like this, and if you just continue to hold this thing all the way, then you're gonna get like stop back at break even. So yeah, that's pretty much what you would have done on Friday. And then I'm just gonna go over some other charts that I have. So I did play some individual stocks recently because the market was just terrible. Like for SPY, I mean, in NQ, there was really no opportunity. So started looking at some option plays, and man, did I forget how easy this was to trade. Like I stepped away from options on stocks for a while, but man, it's just very simple. It's just playing 30-minute crosses. So right here, I took Tesla. So I forget exactly the entry. I think I entered somewhere down in this area right here, near this 10 SMA. I might have been on this green candle right here. I think around, I don't know, when these contracts were like $10 a piece, maybe $9. But yeah, the ones we took, I don't think they were the exact ones right here, but these ended up going. The ones we had, I think, went close to 100%. I swung it overnight, and we got a nice gap down on Tesla. It's very simple. The 10 was below not the 10. Below the 50. The 10 was below the 50, and then we reclaimed the 10.50 right here. Got a nice pullback, held the 10's up, 50's up. Looked really good to swing puts, and you got paid big time because look at these contracts. They went absolutely crazy, and then they eventually did come back down on the 50 right here. Look at this. We pulled back to the 50, and this 50 is trading up super hard. This was a great dip buy if you caught it, and look at the move we got. I mean, these went crazy. I think these contracts went yeah, look at the contracts. I mean, look at that dip buy near the 50, and look at the move. I mean, if like I saw a ton of people on my Twitter timeline just blindly longing Tesla. I mean, if you trade the system, you would have known to stay far from longing it with this chart. Man, this is a textbook chart to go short on. And it's very simple. Just buy the dips, buy the 30-minute crosses, and you're good. So, yeah, then there was this one cross the one day on the 10th. The 10 went below the 50 here, pulled back to the 10, got a nice dump off of there to go short. Market was neutral, I believe, at the time. And here's another option trade you could have taken. UPST, very clean chart. So this 50 is trending up super hard. You could have played this initial cross. The 50 SMA was a good spot to buy on calls, and look at the move you got. I mean, this was like an instant rip. I mean, this came down to the 50 and wicked all the way back up to like $4 a contract on the same 30-minute candle, and that gave a big move. And then obviously we got that 30-minute cross on the 615s, and the market looked pretty bullish. And then we got some continuation the next day a little bit, and these were the dip buys you could have bought right there. And then there's that rejection at the 50 I went over, and I played some NVIDIA on Friday. It was a clean chart. 10 went above the 50, and we had this little 50 dip. The 50 was a little wonky. It wasn't completely curling up when I entered, but the 1 hour, 2 hour were very clean, so it was a solid move. And then there's just other opportunities. Like, look at this chart, man. Walmart, like, such a clean chart. The 4 hour time frame here, look at this move. Look at the 4 hour and daily. I mean, this dip down in the daily, my gosh, is this clean, man. Like, there is so many beautiful setups the last week on stocks. It was actually unreal. I really think like trading the stocks is easier than trading the 5-minute crosses on SPY. I don't know why. I just feel like that's the case. Maybe just some days is better than others, but like the 30-minute charts on options are very nice. And it's very simple. I mean, you're playing the 30-minute crosses. Usually when we get those 30-minute crosses, I mean, they're very clean moves, and you just got to know how to trade the system the right way and know, exactly how to trade the charts. I mean, it's pretty simple. The 30-minute crosses, got to know all the rules, and he'll be good to go. So that's pretty much what we've done the last week or two, and yeah, that's pretty much all I got. Markets closed tomorrow. This video is probably going up on Sunday, so yeah, if you guys enjoyed, drop a sub. I'll probably have a game plan for tomorrow, but other than that, that's all I got. I'm out. Peace.